She's paying $120 for a very good plan. Her doctors are in the network. I checked that too. So I'm a health and life insurance agent. I'm focused on the individual market. I don't do group insurance, and I've done this since 2009. Again, the biggest change with the ACA was the change that's happening now. Subsidies being increased. So if somebody has lost their job, and because of that, they've lost their group insurance, they can get an ACA plan and secure affordable coverage. Nobody should be without health insurance. And I'll say, working with an agent, be it me or most other agents, there's no fees. We're compensated by the insurance company. So, my website is bobcaresforyou.com. I came up with that probably about 2 years ago. The fact is, I realize I've always cared for my clients. I get such positive feedback from my clients.
Cool.
They know, they tell me, Bob, you care. Well, sometimes the obvious isn't self-evident. And so when I realized they were saying that to me, I said, hey, dummy, put it out there. Bob cares for you.
Yeah.
And that's what I do. So again, 3 minutes have come and gone.
Okay.
The ACA Act was passed. That's come and gone. Clients, customers today who do not have insurance need to speak to someone who knows the plans and is certified on the marketplace.
Cool.
I happen to be, and I could be very helpful.
Yeah,
And I
appreciate
thank
that.
you, Glenn, for the time.
Well, thanks. And everybody, and again, I always say, let's use each other. I mean, I know what you do even more now, so I'm going to try to recommend you since you're on the call. And I've always said, people that are active on things like this and that are out there and that respond, I'm going to remember you a lot more than people who don't, who constantly just flood, my inbox or whatever, but never respond, never, follow up, never do what they say. I always say, do what you say what you do, So anyway, just little things. There's things that happen. Oh, real quick, we got plenty of time. I'm going to ask this question. 20 seconds. What's a good time of day to have this? We talked about noon to 1. Austin, are you still down with noon to 1 or where?
Yeah, I'm still down to noon, from noon to 1. Yeah.
Okay, Kathy, right. Just as you're getting a feel of this, noon to 1. Everybody should be an owner. Like, okay, good Lord, I got to stop somewhere. Noon to 1. I don't care if you eat a sandwich or not. We don't care. But what's a good time, Kathy?
I agree with 12 to 1.
Okay, cool. Bob?
Lunchtime.
Yeah, is that still good?
I used to think 7:30, 8:30, but I realized there's so much competition now to be on a Zoom call.
Yeah.
And I agree. I think noon to 1, everybody kind of stops. Less competition, I know, for me with different carriers and different presentations. So I say noon to 1 also, Glenn.
Ronica, what's a good time? Do you like this or you want to have a better idea?
Noon to 1 during the day for me. Have a young one, so evenings doesn't work.
You just never know. And I was doing Wednesdays because hump day and like, okay, for Monday and Tuesday, I got to do this, that, and the other. And then Wednesday, I got to take a breath and noon. All right. And this, that, and the other. So Karen, what do you think? Is this a good time of day or what do you think?
Sometimes it is. I would say a lot of, just like the 7:30, 8:30 thing, I think a lot of noon times do fill up for other organizations or other meetings. But another good time for me is say 4 to 5.
Okay.
Or
You bring your own
toward
wine?
the end of the day.
Bring your own beer or wine or something? Is that okay? I don't care, man.
Absolutely.
We're professionals.
Well, and until we're out there, commuting or something again, I don't know. But, for me, that's a better time than the noon to 1 some days.
Okay, cool.
This worked, and that's why I registered.
All right, we appreciate it very much. So we're doing great on time again. So here's what I want to do. Let's take everybody gets right around 10 minutes. I've just asked my 3 professional speakers as well, just to comment on some 3 general topics. P&L, profit and loss. Who wants more profit and less loss? I think Dawson can adjust to that in just a minute. Kathy's just going to say, hey, general planning things. Make sure you separate your income from deductions and whatever you've got there. I'm going to let her, about 10 minutes or so. And then Ronica, those overlooked deductions. I always think, man, wait a minute. Oh, my God, I completely forgot I can deduct that. legally and all that stuff. That's what she does for a living. So let me quickly introduce a speaker one at a time as they come on, and then give them about 10 minutes or so. Austin is a business owner as well. He's a professor at Shorter College, a graduate of Keller Graduate Institute, DeVry, Southern Polytech. He helps you keep more money that you have on your own, and make sure that you can do feasibility studies, training, strategic planning, marketing, business plan. How to write a business plan. Think that's going to help your P&L. Operations, project and compliance engineer. So Austin, give us about 10 minutes on profit and loss mitigation, whatever. Let's mitigate the loss. Let's get some more profit. Tell us what's going on.
All right. Good morning, everybody. Thank you again, Glenn, for having me on with your other esteemed speakers. Yeah, the P&L, the profit and loss statement, is very critical in the financial analysis or the scheme of financial analysis for any business, whether it's a small business, small to medium-sized enterprise, a solo enterprise, or a big conglomerate. All right, the P&L, especially when we're discussing preparing for taxes or tax season, understanding your revenues and expenses, your net profits, your gross profit margins, your cost of goods sold. If you're a large corporation, you're using EBITDA, on your P&L. So all of these things are important for preparing for your taxes. Quickly, I mentioned earlier that the Paycheck Protection Program will be expanded. It will be extended from March 31st now to May 31st. There's a 60-day extension on applying for the program. So small businesses out there who have not applied as yet, this is a great opportunity. And the reason why I mentioned that is because last year I helped several small businesses with their profit and loss statements. Small solopreneurs basically didn't have anything. They weren't recording their revenues, weren't recording their expenses. They really didn't know, what the revenues at the end of the year would be quarterly and so on and so forth. But these things are so important. And like I said, you don't need a QuickBooks or anything like that. An Excel spreadsheet is really critical. It will help you. It's a tool that you can use to document all your revenues and expenses and all of the other categories to the profit and loss statement that will help you keep track of everything. So this way, when it comes time to filing taxes or applying for the PPP, you don't have to run to try and gather all this information because you've already documented it, right? So the extension is now to May 31st, and the SBA is given an additional 30 days. And this was all brought forth by Representative Carolyn Bordeaux, who's the new Congresswoman at the U.S. Congress. This is HR 1799, and the Small Business Committee, Carolyn Bordeaux, Representative Bordeaux, and the Small Business Committee worked very diligently. It passed in the House, it passed in the Senate, and so now small businesses will have the opportunity. So it's really important that small businesses, solopreneurs, independent gig workers, get your P&Ls together, understand the importance of having that document ready. Now, I stated documenting your revenues, documenting your expenses for your profit and loss statements, right? Now, if you are a business, you have multiple streams of income. And when I say multiple streams, I mean all of those streams are related to that business. So for instance, I use myself as an example. I do business plans, I do marketing, research and analysis. I also do research and analysis for business plans, right? Those are two streams. I also do workshops and mentoring and coaching. That's another stream. So I have multiple streams that I list on my profit and loss statement. Now, if I was doing consulting and then I had a real estate business and then I had a lawn care business or something like that, those are separate entities that I have set up, so you won't, because I've had people come to me and say, hey, well, I have this business and I have this other business. Can I put them all under one LLC? And I was like, no, it's to your advantage, not only to your advantage, but financially, you have to look at listing those businesses separately for tax purposes, right? And especially they are different business models you really don't want to have under one LLC, right? Just like you don't want to commingle your personal finances with your business finances, you want to keep them separate. You want to create separate accounts, right? So definitely, you know, understand the streams and the different businesses you have so that you can have those P&Ls ready for your accountant, right? The Schedule C is for a single owner LLC. Your Schedule C is where you list all of your revenues and your expenses in order to prepare for your taxes, right? So with your accountant, with your CPA or whomever you're using to prepare your taxes, understand that this is a document, the Schedule C under the 1040, that your accountant will use with you, right? Now, for those of you who are already you know, an existing business and you have been doing business, been paying taxes as a business owner, you're used to that, right? For those business owners who are now coming into business ownership, prepare for that. If you've been doing business now prior to the tax period, this is the schedule, the form that you will be using under your 1040, right? A Schedule E is basically for agricultural or farm-based businesses. So if you are in the agricultural space, the Schedule E is what you will be using with your 1040 in order to file your taxes. Okay. The Schedule, Schedule E for real estate. I got that mixed up. The E is for real estate. The F is for farming, agricultural based businesses. So if you're, like I said before, if you have a real estate business or any type of S corp, you are using that Schedule E with your 1040. And this is why I say, make sure you keep all of your business models separate and not all under one LLC. So to correct myself, the Schedule E we're looking at for real estate businesses and S corps, and the Schedule F for agricultural and farm-based businesses. All right. Sometimes I trip myself up when I got a whole bunch of stuff going on in my head. So sometimes I realize, like, wait a minute, you didn't say that correctly. So I need to come back. Yes, and restate that. Yes. Calculating your gross profit, right? Revenue from your cost of goods sold, right? Now, if you are a business, let's say, for instance, if you have materials that you're using in order to produce a tangible product, you're going to have cost of goods sold. So you're going to have the cost of those materials. Like if you're a restaurant, you're buying ingredients, right? You're buying ingredients to turn those ingredients into a finished product. If you are a manufacturer, and this is huge in the manufacturing business, if you have parts like screws and plastics and housings and an apparatus that you are going to put all those pieces together to produce a tangible product, you are going to account for cost of goods sold, right? So that has to be, because that in itself is an expense. You're expensing yourself in getting all those parts and all those materials, right? So those are listed on your P&L as well as your cost of goods sold, and in order to calculate, your gross profits. So definitely make sure you're doing that. You can sit down with your CPA or the person who is helping you and assisting you in your taxes, making sure that you have those documented as well. Depreciation of assets is also important. I like the straight line depreciation method, the cost or the face value at the time of purchase minus the depreciated value, and then to determine what your salvage value. The salvage value is what the value of that asset is at the end of its useful life, right? So depreciation expenses should also be captured on your P&L, and that should also be accounted for. If you have furniture, if you are a business that utilizes vehicles, like you're a shipping company, or you're a moving company, or you have some sort of a production company where you have vans and vehicles and so on and so forth, equipment, all of those have to be accounted for in terms of assets that are depreciated over time, right? Whether it's 5 years, whether it's 10 years, right? Whether it's a new asset or whether you bought it as a used asset, right? So make sure, and again, you sit down with your accountant and your CPA, whoever is doing your you're accounting for your taxes, making sure you're accounting for your depreciation, because that's an expense that's usually reflected on your P&L, okay? Your net profit, again, revenues minus expenses, to determine what your net profits are, right? Now, the P&L, if you're looking to determine what your cash position is, with your company or whatever working capital you have, that's your cash flow statement, right? Your cash flow statement determines what your cash position is. But what the P&L does, it enables you as a business to now list all of your revenues, your cost of goods sold, understand what your gross profit is, all your expenses, and your net profit, right? So when we're looking at determining how successful we are as a business, right? Determining that with your revenues, minimizing your expenses as much as possible while growing your revenues, right? Creating different revenue streams, right? Revenue streams that will help you capitalize on opportunities to grow as a business. Grow as a business quarterly, whether you're tracking quarterly, whether you're tracking monthly, when you're tracking annually, right? Be able to determine what your revenues are. Minimizing the expenses, meaning you're operating as lean as possible, right? What I advise small businesses, especially those entrepreneurs that are new to small business ownership, I always encourage them to scale, right? You scale as you grow. Don't dump a whole lot of money into your enterprise at the beginning, because if you are paying for your overhead costs, if you're not working out of a home-based office, and you're working from an office, or you have a warehouse, or so on and so forth, you have to account for those overhead costs, right? You have to account for salaries, whether you have full-time employees, part-time employees. You have to account for whether you're bringing in temporary employees. You have to account for all of those, the cost of supplies, cost of materials, So definitely it's important for you to keep that and track those expenses and those revenues as you go along. As I stated earlier, if you're not using QuickBooks or any system to track your finances and to be able to pay out to those services that's providing those materials, or those services, those materials and supplies to you, and payroll, definitely utilize Excel. And Excel will be able to organize your financial information, and this will help get you through until you get a system, a more advanced system that is automated to help you track those expenses and those revenues, help you with your payroll, and so on and so forth, right? So definitely, if you don't have an accountant or a CPA as yet, I know we have some CPAs on this call and accountants on this call, but definitely find one who can help you be organized, help you organize your financials, organize your P&L, and make sure that you are being, financially successful as a business as best as possible.
Hey, great. Thanks for that information. I just want to get high level stuff and give everybody at least a good 10 minutes or so.
Yeah.
So, and we know it's going to overlap a little bit, and what a good segue into two CPAs. We got two CPAs with us. Let me have a quick introduction for Kathy, and Ron can give them about 10 minutes each or so. Kathy's been doing this for 25 years. Right Tax Solutions. She's a CPA. She specializes in small business and personal taxes. Individuals, businesses, we're all like kind of self-employed, and there is a mix there. Sometimes you can't help it, I guess, when you're doing your April 15th and your March 15th things as well. But she's an enrolled agent. That's what's extremely key, that she can authorize representation for you with the IRS. She has a lot of experience dealing with the IRS. So general overall tax planning. I know there'll be a little bit of overall, Kathy, but welcome to our group. Give us about 10 minutes. Well, how do we plan to save money? I want to plan to save money. How do I do it?
Well, to start, I work with a lot of individuals, especially newly self-employed individuals, people who are coming off being W-2 wage earners for their whole career, and now, they're either retired or they got laid off, or, something with the pandemic. Some of them are even stay-at-home moms that are coming back into the workforce. And most of these clients are set up as single member LLCs, which is probably the most common that I know of for small businesses, single owner people. And they like to be put on, as Austin said, on Schedule C. So a single member LLC is what we call a disregarded entity. And they report their income on their individual Schedule C, as opposed to a kind of a larger business, if you will, as a partnership or a S corporation, something like that, is a completely separate entity and has their own tax return. I do both of those, but I really like working with the newly self-employed, because there's so many things that they don't know that I can help them with. And one of the things that I start off with is making sure that they set up a separate bank account for their business. It's so difficult to go through your personal checking account and figure out what is income from your business, what is expenses. You know, you write in your book that you have something for Office Depot, but you know, it could have been that you went and bought cleaning supplies actually for your house. Yep. You know, if you don't have the separate accounts, it's more difficult to keep things separate. The other thing that I like to talk to them about is what are employee business expense, or I'm sorry, what are the difference, I guess, between employee business expenses and a self-employed person business expense. Used to be that you could take some unreimbursed employee business expenses, like for a home office or office supplies or mileage, something like that. But since 2017, you haven't been able to do that. And a lot of people who have been employees for a long period of time don't really know what qualifies as an expense. So I sit down and talk to them about the fact that pretty much everything that you do for your business is an expense, even if it's only 50% of it for your business. And you want to keep track of those type of things. Going back to something Austin said, if a lot of these people are not savvy enough to use QuickBooks or don't have the money to set up QuickBooks, and you can get into some really messed up business stuff if you try and run QuickBooks without having the experience to do it and the training. So I created an Excel spreadsheet many years ago to help my clients. I actually used it for myself for many years because I didn't know QuickBooks, and it was easier to put it all in an Excel spreadsheet. And my spreadsheet has one page that puts where you can put all your income in, and then a next worksheet page where you can put in all your expenses. And I like to see you put in your expenses on an individual basis rather than you going through your checkbook and totaling up everything and then plugging it into the worksheet as one line item, which many people do that, but it's easier when you can look at everything. You also want to look at business use of the home when you're self-employed. The different ways that you can, there's a couple different ways you can set that up. You can set it up to take the expenses, the actual expenses based on the percentage of use of your home, or you can do the simplified method. The simplified method basically says that you have an office that is up to 300 square feet, and you can take $5 per square foot up to 300 square feet or $1,500. And it's a much easier way to not have to keep track of everything in your house. The utilities and the utilities, your garbage disposal, repairs and maintenance, all those kind of things. You don't have to keep up with them if you do the simplified method. So, and with the simplified method, you can elect to use it year to year. You can go back and forth between the simplified and the actual expenses. The other benefit to the simplified method is that you do not have to depreciate your home. And that's something that a lot of people do not understand when they set up a home office, is that depreciation is taken or deemed to be taken, which means that even if you didn't take the advantage of the depreciation on your tax return, when you go to sell your house, you're going to have to deal with the depreciation, and your basis in your home is going to be lowered by the depreciation, even if you didn't take it. So, see, some of the other business expenses, rent, supplies, advertising, travel, taxes and licenses, those are kind of normal expenses. People come up with those pretty much on their own. But the thing that they don't think about is, say you spent $500 to have someone create your website for you. Not only is the website an expense in itself, the maintaining of it, but so is setting it up. So you want to make sure that you keep up with those things and talk to them about it. Taking you can take your cell phone, and you don't have to take the whole cell phone. You could take just 50%. And what some people don't know is that if you have employees, you can pay for their cell phones for business use. And it's not taxable to them, provided that you're using it for so that you can call your people whenever you need to. One of the big things that I like to talk to people about is people who have children and hiring them to work in your business, and how that can save you taxes and expenses. So, for example, you own Tom's Toys and you are currently in the 35% tax bracket on your own tax return, and you have 3 children ages 14, 15, and 17. You can hire them to work for you and get their income taxed at a much lower rate, maybe even a 0%. The current standard deduction for 2021 for an individual is $12,550, which means that you can shelter up to $12,550 for each of your children and you not have to pay tax on it. So, for instance, if you had those 3 children and you paid them each $12,550, you would lower your taxable income by $37,650, and at 35% lower your federal taxes by $13,178.
Wish I was a child again.
Yeah. And if you're a single member LLC and your child is under the age of 18, you don't have to pay FICA, Medicare, and federal unemployment taxes on them, which is another way to save some money on that. Now, if you're incorporated, you don't get that little benefit there, but you can still shelter the income. One of the great benefits of doing this for your children is that you've now created earned income and you can set them up with a Roth IRA. I did this with my children, and it's just amazing the growth that these accounts can have. You can, and you can put up to $6,000 in one of those accounts these days. So if you have a child that you put $6,000 in, say for 3 years, by the time your child, when their age is say 15 to 17, you put in $6,000 a year. And by the time they're 65, that could have accumulated to nearly $500,000. And that's assuming that, assuming a 7% annual rate of return. And that money is coming out to them completely tax-free. I mean, any kind of Roth, what you put in and the earnings on it are going to come out tax-free, provided that you've had it at least 5 years and you're over 59 and a half when you withdraw it. But you put that money in after tax at a lower rate, hoping that when you take it out, you're going to beat a higher tax rate. But when you do it for your children that are at the 0% tax bracket, you're talking about $500,000 of income that has never been taxed and won't be taxed. So
give us about 30 more seconds, Sarah, just to the top level. Yeah, that's cool.
But that's kind of the things that I like to do. And, you know, I guess
Great
that's
stuff.
About it.
That's awesome. This is what we do all day long. I just want to make sure everybody has about 10 minutes or so. So we got a great business strategist, 2 CPAs. Hopefully, let's help each other spread the word. With this is the time of year you got to get all this stuff taken care of, and you got to make sure you're paying the minimum taxes. So I'm gonna give Veronica at least 10 minutes or so. Give some almost to 1. She's a CPA as well. She started her own business at age 9. At 9 years old, she was out in the business world running a business at 9. What were you doing at 9 years old? She was running a business at 9 years old.
She had a CPA at 9.
Yeah, really. How to win and protect your business from an IRS audit. How to protect yourself from an IRS audit. She's an MBA from Kennesaw State, KSU. In this area here, I know things are overlap a little bit, just frequently overlooked deductions. She'll put a little insight into that as well. How to stop overpaying for taxes, help your business save, which if you mix the business and the personal and you separate everything out, that's fine, but she'll kind of help us out. So give Veronica Brown about 10 minutes. Welcome. How are you doing this morning? This afternoon?
Well,
this afternoon.
Thank you, Glenn. Thank you, everyone. And I think that Kathy and Austin covered some really good, content in terms of what small business, should be looking for. And, one of the things that we specialize is on the planning aspect, where we basically scour through tax returns for business owner. We specialize in working with business owners and seeing what are some of the ways can you reduce taxes? As Bob said, taxes is going to increase, and we all know it. So, regardless of whatever the tax code is saying, how can we, how can business owners reduce their taxes? Kathy pointed out they hire your child. I use that as well, and my son is 2 years old. He does marketing stuff. He does modeling for my business, for my social media posts. So that's a great incentive, and you can't believe the amount of careers that kids can do for your business. But when we talk about the overlooked deduction and so forth, I want to point out that I wouldn't give this topic justice if I did not bring up COVID. So I'm so sorry that I have to talk about COVID right now. But I think it's important, just because COVID had brought up some unique deductions that business owners can take, and some of this will continue into 2021 and maybe even into 2022. And the first one I want to mention is what we call disaster payments. And this is applicable to, whenever, the government said that the place is, natural disaster or pandemic, that there's a disaster provision in a code that allows business owners to write off certain expense or pay certain amounts to their employees. Kathy mentioned that you're not, people on W-2 are not able to deduct their home office. But what if you're a business owner and you have employees? You can actually give them some payment for their home office as disaster payment. Your business gets to deduct this amount, and your employee in turn gets some tax-free income for themselves. So for instance, if you needed to give your employees a $5,000 bonus or something like that, some of that can be factored under this disaster provision. And why it's important, because your employees don't have to pay taxes on it, and you too as a sole business owner can use this deduction as well, and also get the deduction on your tax return. The next thing is the employee retention credit. everyone received the PPP. If you haven't received the PPP yet, go ahead and apply. Apply to get it. But even if the tax law update in December, that you can still claim the employee retention credit, even if you're the sole owner of your business, or say for instance, your LLC that's taxed as an S corporation. If you're the only person on payroll, you can still basically claim this employee retention credit, once you qualify. And what's great is the new tax update is making it a lot easier for a lot more business owners to qualify for this. And it's somewhat, it's $5,000 per employee. So it's something that, I think that every business owner should look into to see if they qualify for EVIL. Some quarters during 2020, and I know that this is being carried forward into 2021. The other thing that COVID created that was popular was a sick pay. And this is also for people with employees and those that don't have employees, that, for instance, you couldn't get to work for a certain number of days before because daycare was closed, or you got sick or something like that, and you paid yourself, that you can also go ahead and reclaim some of that money and actually get a check back from the IRS to cover that amount. So for instance, you've already filed all your forms and so forth. That's something that you can go ahead and amend those reporting for and actually get the money. So even if, it's still not too late, that you can go ahead and amend those payroll forms or amend the returns, the reports, in order to claim that amount of credit. And this is actual cash that the IRS is going to send back to you, actually. But outside of the pandemic, I think that, we normally focus on deduction, but I think that tax credits are also awesome because you get a dollar for dollar reduction in your taxes. So especially here in Georgia, there are a lot of state credits that business owners can qualify for. One of the most popular one is also the Georgia retraining tax credit. And this one doesn't really cost any extra money, because if you're using technology in your business, Facebook, LinkedIn, and all these amazing online tools that you have to learn, and even if you have one employee, you can do the paperwork and claim a $2,500 credit against your employee's salary. The great thing is you use this credit to reduce your Georgia taxes on your personal return. So it's a credit that flows from your business. Well, it's based on what type of return you file. Then that if you're an S corp or a partnership, it goes to your personal return and reduce your Georgia taxes dollar for dollar. So you don't have to spend any extra money to get this credit. It's money that you're already spending in your business that you can use this credit for. The other one that's popular, the Georgia First program, this one became popular because of the limitation in the itemized deduction and the standard deduction. That those who are, if you're paying state income taxes, normally you're able to deduct those state income taxes on your federal return. But the issue is, if you don't get to claim the itemized deduction, then that deduction is gone. Or if you are at the cap, which is $10,000 starting in 2018 or 17, that, if your property taxes and your state income taxes combined is more than $10,000, then you're not taking the full advantage of paying those taxes, because the cap is $10,000 starting in 2017. So you can get around this cap by basically using your business up to $10,000 to contribute to one of these Georgia programs. And this is a way how Georgia try to incentivize taxpayers to participating in donating in certain school districts. And they actually pass this credit to your personal return dollar for dollar. Most state doesn't give you a dollar for dollar for this type of credit, but Georgia does give you a dollar for dollar. So if you don't itemize, you owe state income taxes, and or you're at the itemized deduction cap for your state taxes, this is a program that you can look into, because the thing is, you pay it through your business and you get to write off the amount on your business, and you also get to cover your state taxes dollar for dollar based on the amount you contribute. So it's basically it's costing no extra money, and you don't lose deduction. You don't lose that state income tax deduction regardless of what your filing status is. The only thing, so, Georgia has those credits and the federal has those credits. The solar credit is one popular one that we use. And this is you don't have to install solar panels or anything like that on your own. These are just pass-through credits from solar companies that you as a taxpayer can participate in those programs at a federal level and basically get a discount on your federal taxes. So I love credits. They're dollar for dollar reduction and they're unique. So I think that business owners should use them a lot more, see how they can get access to more of those credits. I think that, when we look at other business, one of the common things, Kathy touched on this one, that for people who file S Corp returns, for business owners who operate as S Corporation, the home office deduction is one of the tricky one for S Corp because there's not a form in the return for it. So a lot of times it's often missed in the return just because there's not a form in the return for it. So that's something that, especially now that, most people are working from home or what have you, to make sure that they claim that deduction. Or for people who have a office location outside of their home, like for instance, a dentist that, they have to go to their dental office to serve their clients. If they set up a home office and do just administrative stuff at home, then they also do qualify for the home office deduction under their S Corporation. So, a lot of business owners, once they start making enough income to be able to pay themselves a reasonable salary for the S Corporation, that's normally the most popular way to go to reduce taxes. So combining the home office deduction, making sure that, they do claim the home office deduction under their S Corporation umbrella is also important to helping them pay less in taxes.
That's a lot of information, guys. I know there'll be a little overlap, but I tell you what, the people who missed this are leaving thousands of dollars on the table. Does somebody else? I want to keep, I'm keeping mine. I'm going to make sure this thing is set up. So again, we appreciate you guys just give us a 10-minute high level each, things like that. These events are tricky. I had like 45 people sign up to attend. 45. And I mean, hey, I'm going to say it again. My philosophy is you lead a horse to water, but what? Things happen.
You and I share that same experience, Glenn.
I understand it, and sometimes things happen, but I mean, when you're talking dollars now, you're talking thousands of dollars here. I'm going to break. I'm going to attend this thing. I'm going to find out some stuff.
I want to say, Bob, did you realize that the premium tax repayment that people don't have to repay this year?
Yeah, no, I tell you,
For the health insurance. So a lot of people are happy.
They're giving away so much money that the ink hasn't dried on the money they've given away, and they're still printing more.
They don't have to pay premium tax, so people are getting a lot of refund on top of their other checks.
I have to say that I had an insurance agent tell me that he and a whole lot of others applied for the PPP loan. And I have to say, I don't think their income was impacted by COVID. And I took umbrage with that. I got very annoyed. There are too many people ripping off the system.
Yeah, because you have to show that you're 25% reduced in revenues, from prior to COVID. And a lot of people are not.
The thing is, when the PPP rules that came out initially, there were requirements, there were regulation. Right. So I actually blame the IRS and Congress because they were the one who said, I'll make it easy. And everyone going
exactly.
So they had like all these formulas that people had to prove to get the PPP, how much business have you lost?
Yes.
And it was a little bit more complicated. I mean, I'm glad that it turned out to be easy because it was less work for us.
Yeah.
But at the end, they basically, let's just streamline everything and just let's pass through everything. And then it became a money grab.
Yeah, they should have asked my grandchildren, 10, 8, 2, and 1, how they felt, because they're the ones paying for it, or they
Yeah.
will be paying for it.
Yeah.
Exactly.
And
Hey, this is Henry. I'm sorry I got in late.
I was going, Henry,
something
30
else I had to
seconds.
do.
You got 30 seconds. A MABA member. I was going to introduce you
Well,
to take us
first of
out.
all, well, you can do that.
Go
But
ahead.
I wanted to say that I was very impressed with the ladies in their discussion of what was going on. Obviously, they know a lot of stuff about the taxes, and it would be my pleasure to chat with them later and get some information so I could pass that on to folks that I meet and tell them about all the good things that these people know. So
Everybody's on LinkedIn. I mean, we got it. You see everybody's name there.
Yeah.
Henry's a MABA
Yeah.
member. Bob is, Austin is. So
Yeah.
help us promote each other. And I appreciate everybody hanging on. We'd like to try to
Brenda,
finish early, but
can I make a suggestion?
go
You
ahead.
know, follow up with those 45 people.
Yeah,
Let
well,
them know
I
what
do
they
it all the
did.
time.
You
Why
know,
did you sign up if you had no intention of coming? I mean,
Yeah, reinforcement is the only way that
I
the
know.
next meeting,
I know.
more of those people will attend.
It's amazing.
Yeah.
Why do you do it if you're not? I mean, just we're going to discuss save the whales. Okay, I guess you could do that next week, but this is taxes are due in a week, and I would think if you're interested in it and you sign up, I don't know. I have no idea why you wouldn't do it. So,
taxes aren't doing a week.
Yeah, not until May 17th.
Okay, well,
for
whatever.
individuals.
I know. But it's ingrained in your mind. April 15th is a nightmare, right? You wake up in a cold sweat, and you're, oh my God. Oh, wait. But anyway, and then March 15th was business, right? That was
Correct.
it still stays. The 7004 is my favorite friend on the world.
Yeah.
I appreciate it, guys. We talk all day because this is what we do for a living. But I just want to
Yes,
say
yes.
thank you for being here. Again, we try to give the speakers a good 10 minutes each, and I like to mix it up and have 2 or 3 authorities on every topic, and we try to get more people. If you have any suggestions to me, I won't take any offense. So how to get more people here or how to get more people involved. I think what we've been doing this for over 4.5 years. Metro
Yeah.
Atlanta Business Association. We cover the whole metro area, and I'm a native of Atlanta. I work on the Olympics. If y'all don't know that, you probably do. A lot of you do. But in the late 1980s, I helped get the Olympics here. I met with Billy Payne, and everybody said, "Billy who? What was it? Who? Billy who?" This is
Yeah.
about 88 or 89. No one. Billy, what? I mean, what is he trying to? You mean he wants to bring the Olympics to Atlanta? Who's this crackpot?
Yeah.
Well, I was with the Department of Industry and Trade and Tourism and Business Development and Project Manager, and I met with them, and I said, "Really? Is there?" I'm just throwing this out. Any chance we're getting the Olympics? What? Are you kidding me? You got to be kidding me. So
Hey,
anyway,
I got a
that's
question.
my-
Can I ask a
Yeah.
question? Has everybody
Yeah.
here been vaccinated?
No, not me.
No,
Not yet.
I'm not doing it.
Not
Bob,
me.
last call. You get 10 seconds.
I got the two shots.
Okay.
I'm
All
doing the
right, guys.
J&J.
All right,
Yeah.
guys, I appreciate it very much. I was gonna let you go if you want to go. We appreciate it. We can talk all day on this. Contact me at any time. I'm the president of the thing. So anytime you have questions or help us, if you want to help me out, I'll help you out as well, too. Okay, guys?
All right.
Have a good one. Have a
Take
good
care.
Have a good
Have a good
day.
day, everybody.
Thanks,
Thank
guys.
you.
Thanks,
Bye-bye.
everybody.
Right.
Thanks for attending. Thank you. We'll let everybody
Okay.
go. See you later. Thanks, guys.